I'm James Turk. I'm a director of the Gold Money Foundation, and I'm here with one of the legends of Wall Street, Victor Sprandio, or Trader Vic, as he's known popularly among the traders of Wall Street. Vic, it's a pleasure to be with you here today. Victor's the CEO of Alpha Financial Technologies. I'd like to start a little bit by talking about the markets, where we're going. I know you have some really clear, strong views on the outlook for the dollar.
Well, this is an obvious trend. You look at what's happened in the last 2.5 years, let's call it, and every problem after Lehman Brothers has been solved across the world with borrowing and printing, debasing currencies, and keeping interest rates low. So that trend by Great Britain, Japan, the Eurozone, and the United States basically is going to continue. So you have to conclude, and this is unquestionable, there is no other answer, that you're headed towards an inflationary environment, because that's the way these countries, first of all, have solved their problems, whether they want to or not. And that's what some countries like the U.S. and Ben Bernanke want to do with this country, is solve their problems by inflating away the debt, among other things. So they devalue the dollar has to go down in the long run, and inflation has to be what happens in the future.
So it's print, print, print. You know, what they call quantitative easing is really just money printing.
Yes.
A couple of years ago, I can't remember exactly when it was, we ran into each other at a conference in New York, and the gold price was much, much lower than it is today. And you said to me that, you know, buying gold was probably one of the simplest trades you've ever seen in your entire life. Is buying gold still your favorite trade?
Well, what I said was I couldn't figure any scenario where it could go down. But that was a little lower level. Here, I also believe that gold can only go up unless things change. Now, if things change, gold may change. I just don't see any reason for any change that any government is promoting that would make gold go down.
Yeah.
Now, the only difference is because we live in a very leveraged environment in the commodity world. 10%, 5% margins. Locals, the people who trade on the floors or professionals, use a lot of leverage because they look to get rich in a week. I mean, rich in a generic sense. So the key is, when things change, the gold and silver markets, especially those two, will be extremely volatile. Silver far more than gold.
And that's what we're presently seeing.
That's what you're presently seeing. But the key is, you know, it's unquestionable that you have to have a percentage of your portfolio. Now, this may differ 10%, 5% if you're an institution, maybe as much as 20% if you're a hedge fund, in gold as, if you will, an insurance policy, a hedge, and basically it's been in an uptrend for 10 years. There's no reason to see it change. So gold is still a buy. The only difference is that really you should buy it when it sells off, like now. You know, I don't buy gold in an uptrend where it's moved up 10 days in a row, 5 days in a row, etc. So yeah. On weakness, it's still a great trade and a great investment, actually.
But even if you buy it on a temporary peak in a bull market, eventually the bull market's going to bail you out, because the long-term trend is going to take the price much higher over the next several years.
Correct. It's a little bit of this Trader Vic handle I have. You know, I like to buy
I was looking for the bargain.
I was looking for anything in weakness, because the public, you know, and I don't know who I'm talking to here, but, you know, the public gets very upset if they buy something and it loses 5% in a week. Gold last week lost 4.2%. Nothing in my world. But the point is, most people, you know, get scared. So to try to get them into a good entry point, they should maybe buy in weakness, like now. I mean, you know, gold is sold off. It's been temporary now with a small minor correction, I would call it. So this is a good time.
The $1,500 area looks pretty solid to you then, in other words, in terms of a buying opportunity for gold.
Absolutely. Still, as long as nothing changes gold is going to appreciate.
And when you say nothing changes, you're basically saying nothing in Washington changes. In other words, if we continue down this road of spending and spending and borrowing and borrowing,
Correct.
that's going to debase
Correct.
the dollar, and
Correct.
gold's going to go up in dollar terms as a consequence.
Correct.
And you don't see anything happening in Washington to suggest it is going to change?
This is the Hatfields and McCoys. I mean, you've got the Republicans and the Tea Party swinging the votes, and you've got effectively socialist Marxists on the other side. So, you know, how the twain will meet, I don't know, but certainly till 2012 election, it's not going to change.
Are we going to make it to 2012? In other words, you know, they're talking about a $2 trillion increase in the national debt in August to buy time to put more debt on until 2012. So it's obviously no political will today. They're just kicking the can down the road. Is that going to be a wake-up call for the market that enough is enough?
I think, well, it wouldn't be that easy because the Republicans want cuts in spending of some sort, okay? They are asking for the equivalent. So you have to see how that plays out. But here's really, let's just say the essence of the short term of 2012. I believe the markets will probably make it because you'll probably get a QE3. And by the way, Bernanke has clearly said in the minutes of the Fed, the August 27 minutes, that he leaves open anything he wants to do. He can adjust his the portfolio is what it says. But the key is that what happens to there are two items that are going to create whether we make it past the election. Number one, is the U.S. economy and the world economy going to go into a major double dip? If that occurs and therefore the debt gets structured to go way up in terms of the forecast, because GDP is going way down. So GDP gets called to go into a recession again. Mm-hmm. Therefore, tax revenues go down. Therefore, the debt goes up. And therefore, the projections of future debt, which are now looked at as very beneficent by bond buyers, well, if that happens and the bond buyers back away, then you will not get to the election before major events cause turmoil.
Yeah.
So that's one, and the Middle East, certain war events in the Middle East would be another problem for governments to solve.
Disruption to the oil supplies particularly.
Exactly, and therefore the deficits would get higher and oil would go way up and cause GDP to go down.